Well, the Reserve Bank hands down another interest rate decision tomorrow, and every man, woman and their dog is forecasting that rates will inevitably rise another 0.25%. The Reserve Bank governor's clearly laid out its dilemma in trying to steer our economy away from a recession. Too many rate rises and the economy founders, too few rate rises and inflation remains, and rates stay higher for longer. Warren Hogan is an independent economist and a consultant with a small business lender, Judo Bank. He joins me now. Warren, what's clear is the RBA doesn't think that 10 rate rises in a row is too many.
Yeah, hi Ross, thanks for having me on the show. I think that was the message from last month where they signalled there's multiple rate hikes to come. That, of course, was a bit of a shock for the market and some economists and got a lot of debate happening. But the reality is that we've only got an interest rate of 3.3%. We've got an economy growing at just under 3% with 7%, maybe even 8% inflation. Interest rates are really far too low for the economic circumstances. So I think we're going to see more rate hikes, not just tomorrow, but ones after that. And the question is how high and how far above 4 they have to go. I think the governor's got a 4% target in his mind for the next few months. I think he's got 2 or 3 to come. And really, it's how the economy reacts to all of those rate hikes we've seen, plus these extra ones that'll determine whether that's enough or not.
I noticed that the noted US economist Paul Krugman today indicating that he believes that inflation is now sticky, particularly in the United States, and that the Federal Reserve has got little option but to continue to raise interest rates, even if that does cause a recession. That almost seems to be the message here in Australia, that inflation is becoming sticky, that we know that there's, say, for example, more energy price rises that could be, sort of 30, 40, 50% this year coming still. So there's still inflationary, impacts out there. And while it's there, companies will raise prices. And so this inflation goes on.
Yeah, and look, I haven't seen the Krugman article, and he's usually quite dovish. And I think this is the story and why the governor's keen to get the cash rate here up above 4, like 4.1, because the reality is if inflation does prove sticky, if the economy does prove resilient, we may need to go even higher at some stage in the next 12 months, as we're seeing the debate play out in the US right now. And they're a bit ahead of us on this, of course. So, look, I don't think that we necessarily need to be thinking about the cash rate rising much above 4 in the next 3 or 4 months. But the quicker we get it there, the more chance that we get a bit of traction. We see what this mortgage cliff does, and hopefully it does the job. But I think, unfortunately, what we saw last week in the national accounts was a lot of firepower in the household sector. The Australian consumer is really fighting the RBA here by dipping into their savings and not slowing their spending all that much. So, look, I think there is an urgency still to get that cash rate up a little bit further.
And one of the telltales here is employment, because while people are in jobs, it's quite clear they can cut back in areas if they need to, or they can continue to spend and, as you say, dip into their savings. It's unfortunately, when unemployment starts to rise, that's when you'll start to see the constraint, because it's then essential for people to be able to cut back.
Yeah, well, that's exactly it. I mean, the health of any economy at any time is dictated by how many people have got jobs and, to a lesser extent, by what incomes are doing. And at the moment, in most economies, not only is there record levels of employment, it's full-time employment and incomes are rising. So that's a lot of momentum behind the economy that these rate hikes are sort of trying to fight against. And of course, it does also open up this big picture issue. I mean, the real risk here in the next 2 or 3 years is that the economy and inflation gets away from us, that we have to raise rates by 2 or 3 percentage points more from here, and of course, inevitably create a severe recession. I think that is the scenario that has to be avoided. And the question is, how much insurance would you pay now to avoid that? How much rate hikes would you do now and slow the economy now to avoid that scenario? It's not the debate that happens in the general conversation here, but I'm sure that the governor and the board are thinking like that. And I think that's what motivated them to take that hawkish shift last month. And what will probably see us get 2 or 3 more rate hikes before the May budget.
And one other aspect is that becomes a political point, because no treasurer, no government wants to plunge the economy into recession. They want the perfect soft landing. They want the quilted doona down there that the economy lands on. But one of the real issues here is, of course, that many point to the government and say, well, if you keep spending, if you really have these measures that are really big, sort of, if you like, hoovering up cash the whole time, you're going to create more inflation. But the issue is here that interest rates act on the economy much faster than anything a government can do.
Yeah, and I think you're pointing to something that's, I think, misguided politically, is that the federal government might not be adding to the inflation problem, but when you look at the states, they certainly are, and the federal government's doing nothing to offset that. And they may be trying to get the sort of the perfect outcome now in 2023, early 24, with a soft landing and getting inflation down without a recession. But they're risking the much worse outcome in a couple of years' time. If that government stimulus makes the RBA's job harder, if we underestimate the resilience of the economy and ultimately rates have to go up higher, we are more likely to experience a bad recession with associated business failure and rising unemployment. So I think the fiscal story is a very powerful one, particularly from the state governments, which are spending and investing as much as they ever have.